Well, Elon Musk is now the richest person on the planet.
More than half the satellites in space are owned and controlled by one man.
Well, he's a legitimate super genius. I mean, legitimate.
He says he's always voted for Democrats, but this year it will be different. He'll vote Republican.
There is a reason the U.S. government is so reliant on him.
Elon Musk is a scam artist, and he's done nothing.
Anything he does is fascinating to people.
Welcome to Elon Inc., where we discuss Elon Musk's vast corporate empire, his latest gambits and antics, and how to make sense of it all. I'm your host, David Papadopoulos. This week, while Elon has been tweeting nonstop about quote-unquote illegals at the border, we're going to take a close look at another crisis of sorts, Tesla's share price. It has plunged 30% since late December. Last week's decision by a Delaware judge that his record-breaking $55 billion pay package was unlawful certainly hasn't helped matters, but the situation at Tesla, one of the most valuable companies in the world, has been developing for years. Later on, we'll discuss yet another story claiming that Elon's drug use has material consequences for his companies. To talk about this, I'm sitting here in the studio with Max Chafkin, senior reporter at Bloomberg Businessweek.
Hey.
Hey, Max. And Esha Dey, a stocks reporter who covers Tesla for us. Hello.
Hello.
Esha. Hello. Good to see you here. Okay, so we talked about Tesla stock a little bit last week, and over the past week, it's just gotten worse. It is now, at this point, the single worst stock this year in the NASDAQ 100. And it's the worst out of all 500 stocks in the S&P 500. Some $200 billion has been erased from its market value. It fell yesterday. It opened lower once again this morning. Esha, what is going on?
Well, a lot of things. But before I kind of unpack the many reasons that are driving the stock fall, I just want to take a step back and situate this stock move in a larger context. So as you pointed out, Tesla shares are down almost 30% just this year. But this also comes on the back of a doubling, or more than 100% gain last year. The year before that, which was 2022, the stock cratered 65%. We can keep doing this and keep going back, but the point that I'm trying to make is that this is not an unusual move for Tesla shares.
It's a very volatile stock. It's sort of all or nothing. To your point, there was a period, a 20-month period from March 2020 to November 2021, where the stock rose 1,600%.
Indeed.
So you want to just give us that context, say, okay, let's step back here for a second and see it a little bit for what it is. It's a volatile stock. So that's it. End of show. We're done?
No, not at all. But that's, it's good to understand that this is a volatile stock. Whenever the stock falls or whenever the stock rises, it tends to overreact either way. Despite that, and I think this is the most important point, despite that, the kind of moves and the kind of value erosion that we are seeing in the stock this year is definitely historic. Even for Tesla, the kind of 200 billion value wipeout that we're seeing, it's definitely historic even for Tesla. So why is that happening? As I said, several reasons, but I think the two main factors that investors keep pointing out to me whenever I'm talking to them for a while now are really stand out. So the first one is this slowdown that we're expecting to see in EV demand in 2024.
Max, that we're already seeing in EV demand, right?
Yeah, absolutely. And also not only a slowdown in EV demand, but maybe some signs that in particular demand for Teslas is looking a little bit shaky.
Right. And you were telling me earlier, Esha, that if you're going to play as an investor the slowdown in EV demand, the one stock to make that play on is Tesla. There's no other way you're gonna manifest itself.
Absolutely. So for any investor that's looking at which is trying to play on the electric vehicle market, even globally or let's say even US, Tesla is really the only proxy. This is definitely, at this point, it's not the biggest volume player. It has been overtaken by China's BYD. But even then, this is the most profitable EV company, pure play EV company in the world. So if you are trying to make a bet on the future of the EV industry, Tesla is really your only proxy for it.
And to that point, so EVs were obviously super hot for a long time. Tesla, in large part, because of Musk and his drive and what he's did was the way to play that EVs are the thing of the future. As EV demand slows in the U.S., right, it is suddenly not the hot new thing. Interestingly, as Tesla's market value has plunged, several stocks have gone past it and become bigger than Tesla. And Eli Lilly is one of them, which makes sense, right? Now, Eli Lilly, a maker of these weight loss drugs, that's the hot new thing, not EVs.
Absolutely. EVs back in 2020, 2021 were the hot new things. Like that, they were the hottest fad. No one had any idea of how this will play out. But that market has now started maturing and people are realizing maybe they overstepped a bit, as is something that happens with fads in markets.
Just to say, I don't think fad is, I mean, I understand maybe buying Tesla stock was like faddish, but I mean, a lot of EVs have been sold, and I think it's more a question of how big the market can get, right? Like there were investors who were betting essentially that it could grow a lot bigger than it has. And now it looks like you're going to have a lot of people maybe who own one EV and one gas powered car or whatever, but you're not going to have this like instantaneous overnight EV revolution. Like that to me feels like that was the fad. That was the thing that everyone was sort of hyped up
That
on.
was the fad. The idea that it was all just that the momentum was relentless and that everyone in America within a matter of years was going to have nothing but EVs in their garage.
We can talk about all the things that may have fueled that, but like EVs have drawbacks, and people I think underestimated the drawbacks in terms of charging infrastructure, in terms of repairs. You know, with the Hertz announcement, we talked about that a few weeks back. I mean, part of it had to do with the fact that like getting these things serviced is a pain, and particularly getting Tesla service is a bit of a pain. And all that is, like Esha says, contributing to problems with demand. Yeah,
and to that point, Max, it's not just Tesla that's seeing a slowdown in demand. It is also GM, it's Ford, it's all of them. Now, Esha, this morning, a Wall Street analyst downgraded Tesla stock to a sell, i.e., he is now recommending, this is someone at Daiwa, is recommending investors sell the stock, pare back their holdings of it. And it's interesting to me because when I look at the landscape across Wall Street and Wall Street analysts tend to play a bit of this game where they're very, very, very reluctant to say, hey, sell this stock or sell that stock. They don't want to get sideways or on bad terms with management. In the case of Apple, I'll give you a few statistics. There are 34 analysts recommend you buy Apple shares and only 6 recommend you sell it. With Microsoft, 59 say buy, 0 say sell. With Alphabet, 53 say buy, 0 say sell. With Tesla, it is now 21 say buy, 12 say sell. Why? How do we understand and interpret this very disparate set of facts?
Sure. You know, Wall Street analysts are they are not a very homogeneous bunch, though sometimes it might seem like so. I can only sort of hazard some guesses as to what are the different factors. Yes, right. So Tesla's valuation, which is something that everybody is always talking about, that it's a really expensive stock, has definitely got a role to play. So even if we think that Tesla is one of the most interesting growth stocks in the U.S. market, if you compare it with the other so-called Magnificent Seven stocks, like the
well, we don't use that term on this show.
Okay,
it's banned on this show.
Well,
with the index of 7 large tech stocks. Yes.
Let's say the group of the 7
perfect.
biggest, a cohort of 7 biggest of the tech stocks. Tesla is still expensive. It's expensive.
When you say it's expensive, how, for our listeners, Esha, how do you define expensive? What makes it expensive?
So there are many ways to look at whether a stock is expensive. I would say for a profitable company, for a company of Tesla's stature, one of the best ways is to look at what people call the price to earnings ratio. So it's a way of comparing what a company's share price to the profit it's making.
To the profit and to the expectation of future profits it will make.
Correct. So basically how much money you're having to pay as a shareholder to get have a share of that profit.
Of that income stream.
Right.
The growth story is just very tough with Tesla at this point because, this company sells a lot of cars. We talk about it all the time. It's a huge accomplishment for Elon Musk, something like close to 2 million cars a year. But it's worth way, way, way more companies that sell way, way more cars. Toyota sells like 3 or 4 times as many, or 5 times maybe as many cars as Tesla. And I think it's worth the market caps. I was just trying to look, but it's a little more than half of Tesla's market value. GM, tiny fraction of Tesla's market value, sells more cars. And of course, there's been this growth story, right? Elon was going around in 2020, 2021, the time of the kind of hype around EVs, saying, this is going to take over all of transportation. And remember, not just cars, not just personal cars, but it's going to come for taxis, and we're going to remake our cities, and your Tesla is going to be driving around and, driving your friends who don't have cars. It's going to be this multi-trillion-dollar business. And Elon, that's fallen apart for 2 reasons. One is the downsides around EVs we talked about. The other is that the whole robotaxi thing has just sort of failed to actually come about. And so Elon has a new story, right? Which is Optimus and AI, and he's again trying to find a new fad to essentially attach Tesla to, a new growth story. And I think for a bunch of different reasons, it just hasn't been as successful. I think there's a fool me once, fool me twice thing going on, perhaps with some investors. Also you have these antics, and it just kind of the idea there was some credibility to the self-driving story, whereas Optimus, I've watched these demos, right? You see guys wheel the thing on stage. It doesn't look like, oh, this is about to come from my job anytime, right? So it's just hard to believe it. And then as Esha's saying, you look at the market cap, right? It's pretty big for a company that only sells less than 2 million cars a year.
When it lost $200 billion in market cap this year, that $200 billion it lost in market cap, it still has a market cap of nearly $600 billion. But what it lost alone was greater than the market cap of Ford, GM, and all these other companies combined.
See, I think that's exactly what I was trying to get to. Why is a company of Tesla's size having so much of polarizing views among Wall Street analysts? And this is the heart of that that conversation. Is it a car company? Is it a tech company? Or is it a weird amalgamation of a car and a tech company? And I think that question has not been solved yet. So when we look at the Wall Street analysts who cover this stock, so for the other 6 big companies, it's largely analysts who cover the technology space, right? For Tesla, you would see it's a mix of analysts who cover car companies, which are essentially value stocks. That's how. So they use a different way to view these stocks. But then there are also analysts who really cover tech stocks. And even some of them think Tesla is overvalued as well. But that's where this kind of weird polarization between Wall Street analysts comes from.
We need to talk about Elon Musk, right? Because it's not just about, price to earnings or whatever. It's the fact that he is the thing that separates Tesla from being a car company versus a, AI crazy growth stock. And so I think that is also...
that's a really good way to frame it, right? Elon Musk walks out the door, and what Wall Street investors currently value as this incredible tech growth stock, from the moment Elon Musk closes the door on Tesla, it absolutely becomes just basically becomes a car company.
You could also imagine a situation where they bring in, I don't know who, Adam Newman comes in, he's and he's energized, he's got the Don Julio, and he's able to spin a story that maybe it's not as good as the Elon Musk story.
And the price to earnings goes to 100.
Right, but you could imagine a situation where another tech executive, it's not exclusively Elon Musk, but I do think he's a big part of this. And you lose him, and it gets just way harder to tell that story.
Let me take that for a second, Esha, and go to the other side of it, which is the short sellers. Elon Musk despises short sellers, the people who bet against the stock, bet that his stock or any other stock will decline in price. Have they, as Tesla has plunged this year, have they raked in and made a big fortune?
Not really. I mean, let's look at the data and what that tells us, right? So there was a time, even before Model 3 was launched, and around the time when Model 3 was being launched and Elon Musk was going on and on about his so-called production hell, around that time, Tesla's short interest used to hover, I would say, around 30%.
And the short interest is the percent of the total number of shares out there that people have borrowed to then turn around and sell
Correct.
in a
So
short.
I guess a simple way to look at it is like what percentage of investors are kind of betting against the stock.
Okay, and it got to as high as 30%, which is a pretty high number.
Very high number.
And today that number is what?
Around 3%. And it hasn't really budged from that. Like we would see like small spikes and drops, but it really has been hovering around that 3%.
Okay, so 3%
mark.
indeed is pretty low. So basically that means that when the stock soared in 2020 and 2021, he gave the short sellers such a beatdown. And I believe in 2020 that they lost $38 billion.
That's right.
The short sellers did that year.
I mean,
that he just scared them all out of the market. So the David Einhorns, the Jim Chanos, even Bill Gates, right, famously was short. They all got scared.
Well, I mean, it's possible that they all have, or some of them have short or small short stocks.
They own short shorts? No.
Well,
let's not get there.
Not only when you lose money on Tesla, he insults you on top of that. So you take a huge loss, and he burns you on Twitter, as he does to all these guys when they.
Did you buy a pair of the short shorts? No.
Santa did not bring those to me.
Right. Okay. All right, Max. How does this plunge in Tesla's value affect his broader empire? I know you said earlier on there's a bit of a halo effect, but for instance, I think we know that in 2022, at some point, he was considering financing his acquisition of Twitter by using Tesla as collateral. It was going to be one of the biggest such loans in the history of the world. Mercifully for him, I think he backed away from that idea, because if he had, he would be feeling a lot of financial pain right now. Are there other knock-on effects on the rest of the Musk constellation?
We talk about this all the time, but this is a very rich man who does not have a huge, he's got plenty of cash, but he doesn't have just buy random failing software company for crazy overvalued prices cash. You can't make a weed joke and an acquisition every day if you're Elon Musk without essentially selling some Tesla stock or borrowing against your Tesla stock. And he's stretched, right? He's a major shareholder of SpaceX, major shareholder of Tesla and that's part of the reason he wants more. He's saying it's partly because of control, but I think it's partly also because, I think it's weird to say this, but I think he may be feeling the pinch a little bit.
The world's richest man, world's richest person is poor. So
when you're trying to start all of these companies that are hugely capital intensive, right? These are not. This is a guy who brings Silicon Valley, know-how or whatever to capital intensive businesses, but that doesn't mean they don't cost capital. And Neuralink, of course, even if this patient is still doing well, which we haven't heard anything about that lately. But in any case, that's a 10-year project. You have this boring company, this massive infrastructure thing. The sort of best economics are with X, which that kind of tells you how, that he needs a lot of cash.
Right. So they're both capital intensive, and the return on investment tends to often take a long time.
It also gives him a lot of power, because if he's capable of self-funding things that generates interest from investors by itself, because all of a sudden it's you could either join me on this crazy ride with Neuralink or whatever, or Boring Company or X.AI, or I'm going to make all the money. It gives him negotiating leverage, having this huge wad of cash.
Now we need to talk a little bit about drugs, as one does on this show, and the board and corporate governance and Elon's relationship with the board, the Tesla board. The Wall Street Journal, Max, for the second time in about a month, has come out with a story that they clearly have put a lot of time, effort, and energy into, spelling out the nature of his drug use and his interactions with the board. What were your high-level takeaways?
So we talked about the last piece, and I think this piece has some things in common with that. This is the Wall Street Journal, really respected news organization, kind of going at what has been, I would say, kind of like an open secret, right, in Silicon Valley, which is that Elon Musk parties. And there are a lot of stories going around, and have been for years, from sources that range from reputable to other celebrities talking about accusing Elon Musk of doing drugs with them. Azalea Banks, during the 420 funding secured fiasco, alleged that Elon Musk was on LSD. She's kind of been a continual critic. What's new in this story, I would say, is the suggestion that the board is very worried and that certain Tesla board members, the story also says that some board members have done drugs with Elon Musk and that they've been pressured to do drugs with Elon Musk, which is kind of funny because it's like awkward to like say no to when he passes the bong or whatever. It's like pretty hard to say no. But I mean, what's really interesting is the suggestion that some board members wanted him to go to rehab. And that if that is true.
Well, Larry Ellison.
That Larry Ellison,
them, right?
a close friend of Elon Musk, very important ally, probably his most important, powerful ally, according to this Wall Street Journal story, invited him to Hawaii, where Larry Ellison lives, to dry out. Now, I should say, Elon Musk has denied this, as he often does, right? He went on Twitter and kind of ragged on the story with his fans. He said, number one, no one ever used the word rehab to him, and that he went to visit Larry Ellison, but it was just a family trip.
Esha, one of the things that jumped out at me in the piece was, in addition to the drug use that's got Max so fascinated, is the super close ties, all the complex web of businesses that Musk has with members of who are supposed to be independent on the board, on the Tesla board. We know from last week's Delaware court ruling where his pay package was dinged, one of the things that the Delaware court judge ruled was that, hey, Musk was just too cozy with the board and the way this enormous pay package was struck was just not kosher. How do investors look at those Musk ties with his board?
So questions about Musk's leadership are not something that are never discussed, especially when I'm talking to investors. But I also want to point out that investors who love Tesla because of Elon Musk kind of take it in their stride that there are drug use. It's kind of, as Max said, that it's an open secret. Musk has been reported to not be the easiest person to work with. So that does create...
Not dissimilar to
It's
Max.
like the Rolling Stones. Like if you found out that the Rolling Stones were using drugs before their shows... Yeah, that seems like it might even, it's not only that something you would expect, but I think there's a sense, including among some Tesla board members, that this drug use might be helping him, right? Like you have Antonio Gracias, who is a close friend of Elon Musk, donating money to institutions to study psychedelics. These are people who think that psychedelics might be performance enhancers. So you think the stock
should be rising on stories of this drug use,
No, this is bad. It's not good. Even in your own personal life, you know that when people start talking about so-and-so needs to dry out or whatever, it's probably gone past the point of just a party or two. But again, it's hard to know because this is coming from anonymous sources. We don't know who is speaking to the Wall Street Journal because we don't know. It's a little bit hard to say, are these just, a handful of isolated incidents? Although he hasn't specifically denied every allegation, he said he's clean.
I can't get you two to stop talking about drugs. I keep trying to push this conversation to the much more sober topic of corporate governance and his ties with the board, which I know you can't comp to a good conversation about drugs. But Max, I guess I wonder, as I look at the way he's forged these incredibly tight ties with just about every member of that board, it just keeps bringing me back to an episode in a period, an incident that I think you know very well, which was when he was ousted in that coup by the board at PayPal.
Absolutely, yeah. So Elon Musk, and I've written about this a bit, but he and others have as well. But yeah, he behaved in a out of control way in terms of his management style and so on, and board members were pressured by his executives and he was pushed out. But, a lot has changed.
And that was back in when, 2000?
That was, I believe, in 2001.
And that was a pretty scarring experience for him.
It was. When he says, I need more Tesla stock because I don't want to take over. I think part of that is he's just trying to get a big payday. But I do think there is some real part of his psychology where he is actually worried about being pushed out. And he has for years had some of the chip on his shoulder comes from this PayPal experience. I will say that I don't think the Tesla investors who are worried about Elon Musk's drug use are the ones who think it's a car company. But if you think that this is like a crazy, awesome, AI, robo-taxi thing, you want him to be in charge. You want the cozy board. Like Matt Levine made a joke about in one of his columns a couple weeks ago that Elon Musk could like put a bag of ketamine on the boardroom table and the board would say, yes, sir, that was a very good decision. If you believe he's a creative genius, it's kind of like the Mick Jagger thing. If I told you, Mick Jagger is really responsible for a lot of the decisions that the Rolling Stones are making, you wouldn't be like, oh my God, that's horrible. You would be like, great, he's a rock star. He should be. And it's the same thing with Elon Musk. And I'm not endorsing this line of thinking. I think it's like, it's a lot of things put together that raise serious questions. But like the believers believe that Elon Musk is a kind of singular genius who should be left alone.
Let's call it quits for the day. Thanks for listening to Elon Inc. Thanks to our panel, Esha and Max.
Thank you.
Great to be here.
This episode was produced by Stacey Wong. Naomi Shavin and Rehan Harmansi are our senior editors. The idea for this very show also came from Rehan. Blake Maples handles engineering, and we get special editing assistance from Jeff Grocott. Our supervising producer is Magnus Henriksen. Huge thanks to Joel Weber. The Elon Inc. theme is written and performed by Taka Yasuzawa and Alex Sugiura. Sage Bauman is the head of Bloomberg Podcast and our executive producer. I am David Papadopoulos. If you have a minute, rate and review our show. It'll help other listeners find us. See you next week.